Welcome back, viewers. So in this video we're going to do some standard costing related variance analysis. So variance analysis involves studying of variances. Variance, to put in simple terms, variance refers to the difference between the actual result and the standard result. So what we do in current business practices is that the business manager, they set certain standards relating to cost, relating to sale price, and the actual performance is measured against those standards, and any difference is then analyzed and studied as a part of standard costing variance analysis. So we're gonna take this simple question. This is very common one related to variance. It's of Becton Labs Incorporated, where the unit produced is called Fludex, and the standard data has been provided. This is per unit standard data, per unit direct material, per unit direct labor, hours. Okay, and this is the data relating to the actual performances, and these are the requirements. So in this video we are going to deal with this first requirement, the two subparts, the calculation of variances and the analysis. So just quickly move ahead with calculation of direct material price variance and quantity variance. Okay, so material price variance, as our name says, it's price variance. So it requires this thing, actual price, that's gonna be actual price per ounce, standard price, that is standard price per ounce, and the actual quantity purchased. Okay, so I have summarized the data from the main question data that is related to the material, and that will be used in the calculation of material variances. This is the data, this is the standard data, and this is the actual data from the point A to point A, B and E. Okay, so this data says that standard are set as 1 unit of product uses 2.2 ounces, which is to be purchased at $23 per ounce, and actual material cost is 237,600. Actual quantity that has been purchased is 11,000 ounces, and 2650 ounces are remaining at the end. This is as per point B. See this point B, which says that at end of the month 2650 ounces are remaining at the as an ending inventory, and material purchase is 11,000 ounces at a cost of 237,600. So this I have summarized here. This will be used in the calculation of price and quantity variance. So first, quickly we go through the price variance. As stated, price variance will use actual price variance, standard price variance, and the actual quantity purchased. So standard price is known. Here it has been stated at $23 per ounce. Actual quantity purchase is also given as 11,000 ounces. Actual price is not known. So first we will calculate the actual price. Actual price will be calculated by considering the actual cost of material purchase and actual quantity material purchase. So actual cost of material purchase is 237,600 and actual quantity purchase is 11,000 ounces. So actual price will be total actual cost divided by total actual quantity purchased, which is coming around 21.6. Okay, I made a mistake, it's 237,600. Oh, come on. 237,600 divided by 11,000, you're gonna get $21.6 as an actual price per ounce. Now standard price has been provided at $23 per ounce. So this will be compared for the variance analysis, material variance, price variance. So as stated, material price variance will compare the actual price and standard price. So actual price is 21.6 and standard price is 23. Actual price is less than the standard price. When the cost is less than the standard cost, the cost variance will be a favorable. So here the $21.6 actual price is less than the standard price, which is $23. Hence the price variance that will be calculated will be a favorable price variance. So material price variance is equal to actual price minus standard price and into actual quantity purchase. As stated earlier, price computation will require these three things in calculation: actual price, standard price, and actual quantity purchased. This will be the formula: actual price minus standard price, and will be multiplied by the actual quantity purchased. So actual price is 21.6 calculated earlier. Standard price is $23 provided in the question data, and 11,000 ounces have been purchased. This has also been provided in the question data. Quickly do the calculation. So 15,400 will be the material price variance, a favorable one. So it is coming in negative, you can, and because the actual price is less than the standard price, the variance is coming as a negative amount, and favorable because it has been already established why this will be favorable, because actual price is less than standard price. So material price variance is 15,400 favorable. Now moving on to the quantity variance. Quantity variance considers or requires these things: actual quantity used. Okay, in price variance it was actual quantity purchased. Here it was its actual quantity used, standard quantity allowed, and standard price. So standard price is known here as $23 per ounce. Standard quantity allowed is 2.2 ounces per unit, but number of units produced here, as per point E, there are 3,750 units produced. So we need to know how much standard quantity is allowed for total 3750 units of actual production, and also we need to know actual quantity used. These two figures are not known and we need to calculate it. So first, actual quantity used. As you can see, the question data states the actual quantity of material purchased is 11,000 ounces and actual material remaining is 2650. So the difference between 11,000 and 2650 will be the material used. So quantity material used is equal to material purchased minus material inventory at the end. That means 11,000 minus 2650. 8350 is the actual usage. 8350 is the actual usage. Now we need to know this thing we have calculated as 8350 ounces. Now we need to know the standard quantity allowed for the actual production, that is 3750. So 1 unit requires 2.2 ounces. 370 units will require 3750 times 2.2, 8250 ounces. So standard standard material allowed for actual units will be 8250 ounces. It's very simple because 1 unit required 2.2 ounces, 3750 actual units are produced, and hence this will be multiplied by 2.2 and we'll get standard material allowed quantity with 8250 ounces. So to sum it up, actual material used is calculated here 8350 ounce, actual material usage is 8350, and standard materials allowed to be used 8250. Now compare these two. Before calculation of the variance, you can tell whether the variance is going to be favorable or unfavorable just by the analysis of this. See, actual material used is 8350 ounces. but the standard materials allowed to be used was 8250 only, which means the actual material used is more than the standard usage allowed. Hence the quantity variance will be unfavorable. Okay, because the actual usage is more than the standard allowed, that is why the variance will be unfavorable. Now go ahead with the calculation. So material quantity variance will use these things as stated earlier. So the formula is actual quantity used minus standard quantity allowed into standard price. Actual quantity used is 8350 ounces, standard quantity allowed is 8250 ounce, and the standard price is mentioned here is $23 per ounce. So 8350 minus 8250 into 2300 is the material quantity variance. Material quantity variance is $2300 unfavorable because actual usage is more. Okay, so we have calculated price variance, we have calculated quantity variance, that is requirement 1A. 1B is analysis. So the materials were purchased from a new supplier who is anxious to enter into a long-term purchase contract. Would you recommend that the company sign the contract? So the answer is yes, it is recommended, because the new supplier is providing at a actual price of $21.6 per ounce, whereas the standard price is more, and that is why the price variance is coming as favorable. So the new supplier is basically providing at a lower cost, and hence it is recommended to go ahead with this new supplier. That is why the answer is yes for this subpart. So that's it for the material variance calculation, and I'll see you in the next video where we're going to discuss the material the labor rate and variance, efficiency variance, and the variable overhead rate and efficiency variance. Thank you very much, and please subscribe for more such videos. Thank you.